What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. So we're going to talk about the top 10 stocks. These are going to be dividend stocks that I would recommend anybody in their 20s or in their teens to purchase. Now, I'll tell you guys, if I was in my 20s, I would focus on these dividend stocks for passive income and for growth. With every single one of these stocks I'm going to share with you guys in this video, you are getting exposure to growth. So these are going to be companies that pay out a dividend, but they also give you exposure for growth. And of course, because these companies pay out a dividend, you're making that side money, or you're making those dividends from these stocks that you can go ahead and basically reinvest in these companies to go ahead and grow them even further. So I'm really excited for this video. If you guys are new to this channel, I do focus on my bucket list portfolio. This portfolio is broken up into dividend stocks as well as growth stocks. I have my growth pie here, and then all the other pies in this portfolio do pay out dividends. So we're going to jump right into it, but before we do, I want to go ahead and give you guys an update on this portfolio. We have hit all-time new highs. Very excited about that. The portfolio is sitting at $144,502. Just in the last day, guys, we're up $1,000 or 0.71%. In the last week, we're up $772 or 0.54%. In the last month, we're up $7,239 or 5.38%. In the last quarter, we're up $5,558 or 4.27%. In the last 1 year, we're up $14,717, about 17%. And then all time, we are up $17,743 or 25.45%. And if we look here, as far as my earned dividends goes, I have earned $1,696 in earned dividends. But now, talking about dividends, these are going to be the stocks that I would recommend anybody in their 20s to go ahead and buy that pay out dividends. We're going to start with the one that I have the most money invested into and then go down from there. So the first one on this list is going to be a stock that pays out a dividend, but it's not extremely high. That's going to be with Apple. Now, Apple is really a growth company, but the nice thing about this company is they also pay out a dividend. They actually started paying out a dividend about 8 years ago, and they've consistently been paying out their dividends since then. As far as my position in Apple, I have about $20,000 in current value. I'm up $5,200 or about 70% in this company. Now, Apple is the largest company out there. They have a market cap of $2.4 trillion. I believe this company, just in the next year, is going to go above $3 trillion. And guys, if I was in my 20s, this is a company that I definitely want to have exposure to because of their ecosystem. They have one of the strongest ecosystems, and I believe this company, even 20 years from now, is still going to be one of the largest companies out there. I personally think this is going to be one of the top 3 companies when it comes down to market cap, even 20 years from now. Now, as far as their PE ratio, they have a PE ratio of 31, so they are a bit overpriced at this point. But when you go ahead and compare that to the S&P 500, that's literally just in line with the S&P as well. And they have a dividend yield of 0.57%. So definitely like this company, definitely like their growth potential because they are working on some secret projects behind the scenes here as well, which include electric vehicle, and it also includes goggles as well. They're working on AI goggles as well. So we'll see as new projects come out, but definitely one of the biggest companies when it comes down to the strongest ecosystem. Now let's go ahead and get into the second stock. The second stock on this list is going to be NVDA. Now NVDA is one of the largest semiconductor companies out there. Basically, they make chips for everything. They make chips for the gaming industry, for the data centers, for cryptocurrency, for AI technology, for vehicles. So this is the largest company when it comes down to semiconductors. Now, as far as my current value goes, it's sitting at $6,671, or I have total gains of $2,481, or I am up 99%. Now, with this company, they have a very low dividend. Now, the current price of NVIDIA is trading at $194. They have a market cap of $120 billion with a PE ratio of 22. So that's not a bad PE ratio for a company that has a lot of growth potential. Plus, they pay out a dividend. The dividend is extremely low at this point. It's 0.08%. But guys, with this company, if I'm in my 20s, I want to focus on a company like this that has a lot of potential for growth. I believe this company is going to stay the #1 semiconductor company out there. And as far as their market cap, they're definitely going to grow in my opinion. So I like this company for that. Plus, with dividends, these dividends are just going to keep compounding over time the earlier you start. So this is going to be a second company that I really like. Now, the third company in this list is going to be JP Morgan Chase. Now, I like to have exposure to different sectors out there. So this is going to be one of the companies that I personally really like in the financial sector. JP Morgan Chase, the current value in my portfolio is sitting at $5,009. I'm up about $1,100 or about 68%. Now, personally, when I talk about banks, JP Morgan Chase is the largest bank in the US and they're one of the largest banks in the world. This company is really focused on technology. They're also getting into the fintech space. Plus, they do a lot of acquisitions and mergers. So I like this company because they are focused on technology and they're one of the leaders when it comes down to innovating the banking sector. Now, the current price for this company is trading at $152 with a market cap of $462 billion with a PE ratio of 11. Now, I believe this is a great time to go ahead and look at this company because anything under 15 to me is still considered a buy. Now, their dividend yield is sitting at 2.33%, which is actually a decent dividend yield for the banking sector. And again, the earlier you start in this company, the more this yield is going to go ahead and compound. So a believer definitely in this company when it comes down to the financial sector. Now, the next company that I would recommend is going to be in the real estate sector. And I actually have two companies that I like in this sector, but this is going to be with Store Capital. Now, the nice thing with investing in real estate is these are called real estate investment trust. Basically, they're called REITs. With REITs, they have to pay out 90% of their overall revenues back to their shareholders. Hence, these companies usually have higher dividends. And because you're invested in real estate, it's one of the safest sectors to go ahead and invest into long term. But personally, I love the dividends in these companies and their growth potential. Now, with Store Capital, my current value is sitting at $4,606. I'm up about $1,000 or 36%. But guys, if we look at this, Store Capital is currently paying a dividend yield of 3.87% with a PE ratio of 48. And this company is almost a $10 billion company. They're sitting at right around $9.9 billion. And currently, they're trading at $36. So I do really like this company because Store Capital focuses on triple net leases. And Warren Buffett is a huge investor in Store Capital. He owns over 10% of this company. And I like Warren Buffett and his overall philosophy and strategy. So that's also a plus. Now, the next company is going to be in real estate as well. And this is going to be with Realty Income Corporation. My current value in this one is sitting at $3,700. I'm up about $1,200 or 31%. Now, Realty Income is also a triple net lease company. They are one of the largest landlords out there as well, but they focus on larger tenants. They have tenants like Walmart's, 7-Elevens, Regal Cinemas, AMC's, Walgreens. So they have a lot of large tenants. Now, as far as their current price, they're trading at $70. They have a market cap of $27.3 billion, and they're trading at a 79.2 price to earnings ratio. But their dividend yield is sitting at 3.93%. So they have a pretty attractive dividend yield. So I really do like this company. If I was in my 20s, I would definitely focus on looking at these two companies for real estate exposure in my portfolio because long term, they have a lot of potential for growth. And real estate is one of those things where at the end of the day, it is one of the smartest investments to go ahead and get into. Now, jumping into the sixth one. The sixth one is going to be Nike. Of course, I'm sure we've all heard of Nike. They are one of the largest brands out there. They're the most recognized brand in the world. With Nike, my current position is sitting at $4,600. I'm up about $900 roughly speaking and 67%. Now, this company I have in my consumer discretionaries sector. So I like to, as you guys can tell, go ahead and diversify in the different sectors. And with this company, they have a current price that they're trading at is $161 with a market cap of $252 billion. They do have a little bit higher of a PE ratio, so the PE ratio is 73.7, and they have a dividend yield of 0.66. Nike's just one of those companies that I believe is going to be sticking around for the next 50 plus years. I don't see this company going anywhere because they have a lot of different contracts. They have a lot of different ways that they go ahead and make money. So they really focus on influencers. They really focus on building those relationships with some of the top athletes out there, with shoes, with apparel, and with all the other ways that they go ahead and make income. So very, very bullish on this one. This is a great company, in my opinion, for anybody in their 20s to go ahead and look into for dividends and growth. Now, jumping into the next one is going to be a company in my consumer staples sector, and that's going to be with Costco. Now, Costco is one of the largest wholesale distributors out there. My current value in this company is sitting at $3,533. I'm up about $600 or about 35%. Another company that pays out a dividend that has a huge market cap. This company is currently trading at $415 a share. The market cap is sitting at $183 billion. Their PE ratio is not too bad. It's definitely on the lower side when we go ahead and compare them to some of the other companies out there in the S&P or in the Dow, and with a PE ratio of 38.8, and their dividend yield is sitting at 0.69%. Now here's the thing. A lot of these companies, as we're looking, pay out a little bit lower of a dividend, and that's because they are really focused on hyper growth. These companies are focused so much on growth that they're taking a lot of their returns and putting them right back into the company to go ahead and grow the company. Hence why there is a lower dividend yield. If they're paying a higher dividend yield, more than likely what that usually means is the company has really exhausted their growth potential, so they're just paying back their shareholders more in returns to invest in their companies. So being in your 20s, this is actually a really good thing to focus on companies that have growth, plus they're paying you passive income and they're paying out a dividend. But a huge believer in this one. Now let's go ahead and jump into the eighth one. The eighth company is going to be probably a fan favorite, and this is actually considered a communication company, and this is with Disney. Now Disney's current value is sitting at $5,595. I'm up $458 in this company, or about 28%. Now this is the company, since I was in my teens, I've been investing into. I keep selling it, buying back into it, selling it, buying back into it. I'll tell you guys, this is a company I would just hold on to. If I was in my teens again or in my 20s, I would just hold on to this company and not let go, because this company, every time I reevaluate this company, they have one of the strongest ecosystems. They have some of the best ways to go ahead and make money, because they have so many different characters that people just love. And guys, every kid knows Disney. I don't see this company going anywhere. Plus, Disney is getting into Disney Plus with their subscription model, and that's just going to be another great way for Disney to go ahead and make additional income. Now, Disney did stop paying out a dividend recently, but I believe that their theme parks have just opened back up. I am expecting an announcement when they go ahead and have their next annual shareholder meeting that they're going to be bringing back their dividends. So very bullish on this one. This company is currently trading at $176. They have a market cap of $321 billion, and currently shows that they're not paying out a dividend. But like I said, this is a company that was paying out a dividend prior to the pandemic, and I believe they're going to be bringing it right back. Now, jumping into the ninth one, this is going to be jumping sectors again. This is going to be in the utility space, and this is going to be with Nextera Energy. Now, Nextera Energy in my current portfolio is sitting at right around $3,000. I'm up $300 or about 16%. Nextera Energy is the largest company when it comes down to focusing on renewable energy. They focus on solar energy. They also focus on wind energy. Really like this company as far as utilities go. They do pay out a dividend, but of course, because they're reinvesting their money, the dividend is a little bit lower. With the market cap of $148 billion, their current stock price is trading at about $75 with a PE ratio of 35, and they currently have a dividend yield of 1.93%. And now let's go ahead and get into the final one. The final one is going to be not as exciting of a company. It's probably going to be a little more on the boring side, but hey, this company also has a very strong ecosystem with the different products and services that they offer, and this is going to be with Microsoft. Microsoft is another large tech company that pays out a dividend. This company, I don't see going anywhere. If anything, this company is just growing and diversifying themselves as far as how they make money. Now, with Microsoft in my portfolio, I have a current value sitting at $4,264. Up about $1,300 in this company, or about 62%. Microsoft has many different ways that they're making money through their software, through their business platforms, through their cloud platforms, through semiconductors, and so on and so on. But this company is actually considered the second largest company out there with a market cap of $2.1 trillion. And guys, the current price of this company is sitting at $281 with a PE ratio of 37.8, and they have a dividend yield of 0.78. So as you guys can tell, all these companies, well, except for Disney, is currently paying out a dividend. So you're getting the exposure for passive income, plus you're getting the exposure for growth. So I like every single one of these companies. These are the companies that if I was in my 20s, this is what I would tell myself to go ahead and invest into and just stick with these investments. So hopefully you guys enjoyed this video. If you want to go ahead and keep up with this bucket list portfolio, goal is to get this portfolio to above $250,000 before the end of this year. Let's see if that happens. Don't forget to subscribe to the channel down below just to keep up with this, guys. And hopefully you guys like the transparency. I'd like to go ahead and share with you guys everything I'm doing in my portfolio. But thank you guys for watching. If you have any comments, let me know in the comments down below. If you are interested in trading with M1 Finance, I will leave an affiliate link down in the description. You do currently get $30 when you go ahead and sign up with them. Personally, I believe it's one of the best platforms out there. But thanks again, guys. Until next time, I'll see you guys at the next one.